I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. What I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it. If demand for gold and silver merely reversed to the 4-decade mean, which is what I think it will do, that implies a 4-fold increase in demand. And that would do a very, very interesting thing to price, away from arithmetic and into narrative.
Good evening, financial enthusiasts and investors. Tonight, we bring you insights from Rick Rule, a well-known figure in the world of natural resources and CEO of Rule Investment Media. In a recent interview, Rule discussed the current silver market and highlighted some exciting trends that could have a major impact on investors. Rule begins by acknowledging that silver prices have surged by over 35% this year, fueled by strong global demand and rising interest from countries like Russia. Notably, Russia's latest federal budget outlines plans to expand its precious metals holdings, including gold, platinum, palladium, and, for the first time, silver. This is a significant shift, as central banks traditionally focus on gold. Rule points out that this could be the start of a new trend, with central banks exploring silver as a speculative asset, especially during bullish cycles. Interestingly, Rule highlights that India and China may also be looking to encourage silver as a savings option for their citizens. This move capitalizes on the cultural significance of silver, particularly in India, where imports are expected to double due to increased demand from both the electronics sector and solar power production. However, Rule cautions that promoting silver as real money in these countries could undermine confidence in their government-issued currencies. Central banks are buying silver at unprecedented levels, a phenomenon Rule admits he's never seen before. While the reasons behind this shift remain speculative, Rule suggests two possibilities. Either these banks are trying to profit from silver's potential to outperform gold in bullish markets, or they are encouraging silver savings in their own countries. Regardless of the reason, Rule emphasizes that silver, known for its volatility, presents an extraordinary financial opportunity for those investors who can handle the risks. One of Rule's key points is that a reversion to the historical mean in demand for gold and silver could lead to a 4-fold increase in demand, driving prices dramatically higher. Such a scenario could shift market dynamics away from traditional arithmetic pricing and towards more narrative-driven valuations, offering significant opportunity.
The increasing central bank purchases of silver, which you've correctly documented, surprised me. It isn't something that I've seen before. And I've been struggling. Well, I haven't been struggling. I've been asking people who are smarter than me what it means. I haven't received a satisfactory answer. Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries. And so part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. What you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. If your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. What I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it. And those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market. An allocation to the higher quality silver stocks and silver juniors, a small allocation, to be sure. An allocation that you can afford to lose 30% of if you're wrong, and an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday, is something you should consider.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Opportunities for strategic investments in silver stocks or junior mining companies. However, he stresses that investors must remain disciplined and emotionally resilient to navigate the risks associated with silver's volatility. Rule also notes that there is an increasing number of inquiries about precious metals from outside the United States, particularly from Germany, where citizens are becoming more aware of the need to own precious metals following economic policies they perceive as misguided. Interestingly, Rule points out a growing trend of young women showing interest in gold, something that has been supported anecdotally by retailers like Costco, who have reported younger buyers, particularly females, purchasing gold. In terms of the US dollar, Rule echoes a long-standing sentiment. It may be the worst currency in the world, except for all the others. Despite its flaws, the US dollar continues to dominate. However, in other currencies, gold has performed exceptionally well over the past 5 years, demonstrating a momentum that has yet to fully play out in the US. For investors outside the US, gold has already established a clear upward trajectory, while in the US, the precious metals rise is still being debated. Finally, Rule advises investors to consider adding both gold and silver to their portfolios. While gold is likely to lead the market upward as a safe haven, silver, with its dual role as a precious and industrial metal, is expected to follow suit, driven by gold's performance rather than its industrial demand. In conclusion, Rule paints a compelling picture of the silver market's potential. With central banks entering the silver game and demand set to rise, the opportunities for savvy investors are immense. However, he reminds us that the volatility of silver means this market is not for the faint of heart. Investors should be prepared for significant fluctuations and allocate only what they can afford to lose. That's your financial update for tonight. Stay tuned for more insights into the dynamic world of precious metals and investment opportunities.
Silver merely reverts to the 4-decade mean, which is what I think it will do. That implies a 4-fold increase in demand. And that would do a very, very interesting thing to price. Away from arithmetic and into narrative, I note that inbound inquiries, which is to say subscribers to Rule Investment Media, are currently running about 50 per day. The majority of those, interestingly, are non-U.S. now. And they are coming from everywhere. A couple of interesting trends. One stands to reason. A lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk. I think come to the rightful conclusion that they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my increase, a little less, 30% of my increase, are now coming from young women. It used to be that the gold audience looked like me. Old, fat, bald, white, rich. There is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, as you know, is now, at least nominally, in the bullion business. And they have reported that a surprising number of the buyers of gold have been younger and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies when we talk about gold breaking out into nominal highs against the U.S. dollar. In other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the U.S. dollar, gold has already established a trajectory. And if I had to guess why an American database like Rule Investment Media is becoming increasingly non-U.S., I suggest that the price action in precious metals in those securities has already demonstrated thesis.